So, I'm here with Sharon Cook from Choice Business Loans.
So, thanks for having me.
Yeah, this is really exciting, isn't it? This is cool. And we're here on my sofa in my house, bookcase behind, and we're just going to have a chat about all things funding.
Yes.
And just business generally. And for those of you that don't know Sharon, Sharon works for Choice Business Loans, and you basically provide funding for small businesses.
Correct.
Where perhaps they may not be able to get stuff from other sources.
Absolutely.
And I've known Sharon for 3 years now.
Yeah, it's got to be. Maybe 4.
Maybe 4.
Maybe 4.
Excellent. See, when you've got good relationships, it's really, really easy. You forget, don't you? And I can say that in all that time, you know, I've put Sharon in front of lots of people, and she's never kind of led them right down the wrong path, and you've always looked after them, which is a really cool thing to do. So what I'd like to start with is a little story, because we're coming up to nearly 7 years ago now when I folded my business, my old business.
Yeah.
Not this business, this one works.
This one's great.
This one's fine. I folded my own business.
Yeah.
And actually, probably the thing that impacted me and had the greatest problem, or caused the greatest problem, was a massive lack of cash flow. I just couldn't get hold of enough cash within the revenue model to sustain it short term.
Yeah.
And my only recourse was the bank, which was really expensive, charge on the house, all that sort of stuff.
Yeah.
And it was fine, but I'm really, really aware that there are loads more options.
There probably wouldn't have been 7 years ago.
Yes, well that's the thing. Well, now it's a very different space, isn't it?
Yeah, it's a hugely different space. And I think after the financial crash and it all just went a bit, peaked on, people started emerging with new ideas. They wanted to make a return on their investment. And the way to do that is obviously charge an interest rate, which the banks haven't been giving us for years anyway. And since 7 years ago, when you were looking at the bank and the banks were getting tighter and they, like you said, they wanted your left kidney and everything else that went with that.
I think it was my right kidney.
Was it your right kidney?
Yeah, this one's no good.
The left one was knackered years ago.
Don't ask for my liver either.
But it's become a space now, and it is a model of its own, the alternative marketplace. So we have, I'm going to say, at least 80 unsecured lenders out there, at least, maybe more, who all have pots of money waiting to give it to businesses.
Wow. That's
enormous.
So what do you mean by unsecured lender? Because some people watching this might
they probably wouldn't know. Yeah, so for me, unsecured lending is normally just on a personal guarantee. There's no second charge on your house. There's no debenture on your business. There's no charge on anything, but you have signed a personal guarantee, which is a promissory note, effectively, to pay the money back.
Yeah.
And can be enforced where necessary. It's like any personal guarantee that you've signed for your mortgage or your credit card. You know, if you haven't paid it, they can have that recourse. How much they get on that, I don't know, and how successful they are, I don't know. But in general terms, what it does is it buys the director into the loan and ensures that they are more keen to pay it back.
Yes.
Because that's all they want. They just want their money back at the end of the day. So it's quite important. And interestingly, there's products coming into the marketplace now that will insure you for your personal guarantee.
Okay, so let me get my head around that. So you want to take out a loan with yourselves, for instance, to grow the business.
Yeah, let's say you're taking out 50 grand or 100 grand, whatever, over 3 to 5 years, but you've got a young family, you've just bought a house, you don't really want to put any of that at risk, and that's really important to you, you can take out an insurance now. So if something does happen, they'll insure a percentage of that debt. And it's normally a percentage of the debt, of the outstanding capital, that a lender would be comfortable saying, fine, we'll call that a day.
Okay. And because it's, I'm making an assumption here that a loan like this will sit on your credit file if it's personally guaranteed.
Anything will sit there because it's a credit check. So I'm not a credit file
expert. As we know.
As we know, yes. But things that they can put a notice against your credit file as a director saying that this loan is now unpaid. Okay. Even though it's in the limited company name.
Because you've given the personal guarantee.
Because you've given the personal guarantee, yeah, it's possible, I think.
So let's go back a stage. Give me an example of the types of business owners that come to you, first of all. Because I'm sure that's quite varied.
It's
It's
massively
massive.
varied. Yeah.
So let's not do an A to Z, but maybe 2 or 3 examples of the kind of people. I guess what I'm saying is actually it's less about the type of business owner, but the type of situation that they're in, where perhaps they need finance. What are the reasons people might want money?
So people want money for growth. Now the thing with growth is there's nothing tangible with growth. So
you're hedging a bet, aren't you?
You're hedging a bet.
Revenue.
Absolutely. Yeah. But who knows what the future is going to be? So if you were to go to the bank, so let's take what people will literally understand. So you go to the bank and they will want your history, your present and your future all out in front of them. And over a certain amount of money, they'll want to have tangible security.
Okay, some assets against that.
Some assets against that, probably your house. If you're buying an asset, so if you're buying a truck with wheels, then the security is on that asset, because an asset finance will secure against that. If you don't pay, they take it away.
Yeah.
We've all seen
Which
that
makes
programme.
sense.
Yeah. It makes sense.
Yeah. It's a bit like a car, isn't it? If you can't pay for the car when you've got an
That's
HP,
right.
they'll just take it
off you.
and you've paid for it as far as you've used it.
Exactly.
Yeah.
Exactly. But with working capital, it's a bit different, because you can't liquidate a person. Some of us might.
You might want to.
I'm sure I'm spending it out there. But you can't liquidate a person. A website in a company name is useless unless you're going to keep that company going. Buying sales or paying to have salespeople join your team, paying for the training, and all that type of thing. There's nothing tangible there for any lender to go, well, you haven't paid us, so we're going to liquidate these assets.
Yeah, okay.
So that is working capital. There's a huge risk. So it's all about future growth. So many of the people that come to us have been to the bank, and the bank's gone, yeah, but I want your house. Or you haven't got enough equity in your home for the loan that you're looking for. Or they have not been trading long enough. So a bank would like to see at least 3 years trading, really, and strong growth throughout that time, not over trading.
And we all know that they're quite difficult boxes to tick, aren't they?
Really difficult. And you've got to have all these things. And increasingly I'm seeing people that are not homeowners, who have incredible businesses, who need the money for growth, and they've got massive turnover, they've got great net profit, but they've got no tangible security for the bank.
Right, so the banks won't touch them.
The banks won't touch them. So even though everything looks great, and especially if they're B2C, so there's nothing, they can't even take a debt book, so they can't, have any sort of debenture over the business that's valueless to them.
Yeah.
So all these nuances that people have, their individual bespoke challenges come to us really for that. And normally it's for growth.
So you're basically helping people solve financial growth problems, aren't you?
I think that's a fair thing to say. And I love it, because someone's coming to you, and they're often, they're coming to you and they know that their business is exciting. They're excited. They're doing it because they love it. And if they're not, then perhaps they shouldn't be doing it. so tip number 1, if you don't love what you do, stop doing it.
Yeah.
And certainly don't take money out against it.
No.
But in reality, these people are exciting. They're growing. They've got passion, and they're adding to the economy. They're employing people, and all these amazing things that are happening. So my job's great. I get to support these people, get them to get the right result for them. So, when we're ill and we go to Google, and we all end up having cancer, even though it's just a common cold. So, using Google to look for finance is a bit like using it to look for your health problems. The ads win, so the paid adverts win.
Those who pay the most get the...
Yeah. You don't know where you're fitting in. So every lender charges differently. Every lender has their thing. But you could be a really good, strong business, and all of the lenders want to lend to you. But you need to know which is going to be the cheapest one for your business.
Or the most appropriate, because cheapest is not necessarily...
Cheapest not always, no. But often...
Because it might be the flexibility of payment terms,
pay early,
graded interest, that sort of stuff.
All that type of thing. But you need to know which one that is. And so without having a table that says this lender's this lender's this, how do you know?
Yeah.
So you could just go on and do an application, you go, oh great, I've got my money. But actually you could have saved £4,000 in interest if you'd done something slightly different. So it's my worst nightmare, Google, for people.
But I suppose in a way, saying that, as a broker, because that's fundamentally
what we do.
Yeah. You are almost like an internal Google.
Yes.
It's a little bit like people might go to Google, but they don't have enough information and education to get the right product fit.
Yeah.
But you do, so you're there. I don't know. You're there lending Google.
Yeah.
It might be a business there. but you're actually able to go to take that problem, find the right product that fits that problem at the right price, and put it in front of them without them having to do all of the research.
So I always look for limiting factors. So every lender will have a certain criteria. So if you want to borrow X, you've got to be a homeowner because your personal guarantee is stronger. You have to be trading a certain amount of time.
Yep.
It could be 1 month, it could be 2 years, 3 years, whatever. Depending on the lender. Amount of flexibility you want with that lend. So what they'll do, what they won't do, and all these different limiting factors. And then you have the limiting factors of the person you're dealing with.
Okay. Credit history,
trading time again, home ownership.
Yep.
You know, what's their cash flow been like for the last 3 months? Have they got any bounce direct debits, for example? Any?
But even that, again, sometimes, you know, you've talked about growth being is that the number one reason people come to you? But sometimes people just need help, just need cash.
They just need cash. And this
That's tougher?
That is tougher, normally because they've got themselves into a situation. And throwing money at something doesn't always solve the issue. It can do. Depends on what that issue is. So when Carillion went under, we had quite a few people talk to us about the fact that Carillion hadn't paid them, obviously. Now that's not their fault, but what that's done is left a massive hole in their cash flow because A, they've already spent the money on doing the job, and B, they've not returned that money, none of the profit. So they're kind of doubly out of pocket. That doesn't mean to say that that business can't easily turn that around with a little financial help to get them to the next stage. But if someone's hemorrhaging money
usually
out of the business, there is probably more of a challenge. So my job is to not just go, yay, have this really expensive finance and I get my commission. My job is to question, why? Is this really going to work for you? Are you sure you can afford this? And also, when there's a decline in business, you're more risky. So it's then more expensive. You probably can only borrow it for a shorter period of time as well. So those impacts, we'll take a 10 grand loan, for example, pop that over 5 years and you're talking, £250 a month? Pop that over 12 months.
It's a lot more.
It's a lot more. And the interest rate will be higher.
Yes.
So does that help? My question to you is, can you afford that money going out of your business every single month?
Or are you better off making sales to the value of that?
Finding some assistance, making sales. Maybe, just maybe, you need to back out of the business altogether. Horrible thing to say, but this is why we have turnaround specialists or insolvency practitioners, because actually sometimes it's just got to call it a day. So I'm not in the business of just saying, yeah, sure, you want the money, just have it. We have to be a bit more consultative than that, for me, anyway. Interestingly, I've got, I work with a manufacturer who's just lovely. I've worked with him for years now. He's adorable. And he has this problem of every single month, at the end of the month where all his bills go out, he's around 30k short. But at the beginning of the next month,
he's like, right,
it's all back up again. So he has this strange thing, and there are challenges in his business that, whilst he's a homeowner, his ex-wife lives in it.
Interesting.
So that's controversial in itself. He's remarried and very, very happy, but they don't own their own home. His commercial property is in his pension.
Okay.
So savvy, really savvy to do that. But that makes it harder to do anything with, because
on paper he just doesn't look like he's got any assets.
He doesn't own it, no. He doesn't own it, his pension owns it. And his pension is a company. So that's...
He's got nothing tangible.
He's got nothing tangible. And we have done a lot of short-term loans for him to get him from one to another. And all of a sudden he'll land this really big order, and he's got to buy all the the materials in, and then he's got to produce it and send it
Yeah.
back out again. So he does have this challenge where he's constantly just juggling money. And we
It's
spoke...
probably a profitable business and doing well.
It's about 13 to 14% net profit.
Which is very good at that sort of
Very
thing.
healthy.
Yeah.
Yeah, very healthy. But that profit isn't there all the time. And he needs to take money out of the business because he's got kind of 2 families to support.
He's got life.
He's got a life, and we all have these things.
Yeah.
We all have these challenges in our business, and it's about how we deal with that. So I was talking to him the other day, and we often communicate. He sends me his management reports every month, which is nice.
It's nice. Yeah.
It's great. It's trustworthy.
Yeah.
And we said, well, what we need to do is we need to consolidate all the debts you've got together, and we need to take it over a longer period of time, somehow. But he's got all these challenges that mean that I can't necessarily do that. But my job is to find solutions and not be a doom-monger, I can't help you. It's a solution thing. We had a meeting today with an asset lender. So when we said about buying stuff with wheels, so actually this, because he's a manufacturer, he's got all these amazingly good machines that don't age. They've done the depreciation already, and now they are at kind of that flat rate.
Yep.
So he has a lot of assets there. And what we discussed today with this new lender was effectively releasing the equity from the assets.
Yep.
The security goes on the assets. So if he doesn't pay, and he leaves, they just take it away and sell it to someone else. They'll consolidate all those short-term debts. It's over 7 years. No flexibility in this loan, though. So where something good happens, something bad happens, so they'd have to do the whole 7 years and pay the whole lot back.
Right, so you can't, there's no repayment of it early if he
No,
gets
I mean,
a
if
big
you did
chunk
it
of cash,
super early, then maybe
They might
they'd knock
think
a bit
about
off. But it's negligible.
Yeah.
But they would also do 4 to 5 months payment holiday.
Okay, so there is some flexibility.
But at the start, they do it specifically at the start, because what they'll do is they'll analyse, which he's already got, I've already got the stuff, but they'll analyse it and say, yes, look, this is the curve, and if we could just take him this far, that will then break that cycle.
Right.
So he can effectively not pay a debt back for 5 months.
Okay, so it's borrow now, pay later.
Borrow now, pay later. It is.
I quite like that.
Yeah, it's very good. I shall email them
Do that on
tomorrow.
your washing machine.
So, yes, it's great. But for him, and that example, it is about finding something that's suitable for the business. And that's not always easy to do.
Nice. And you would never get that from a bank.
I think the bank manager's role has changed, and there's a load of really awesome bank managers out there who, if they could, would.
But they're working within a system
But
that
they're
doesn't necessarily allow them that flexibility.
Yeah, so the old-fashioned bank managers who probably now work at Handelsbanken or gone
Other
to,
banks are available.
Other banks are available, of course. Or they've gone, they've taken redundancy because they can't do what they used to do. They can't sit down over lunch. They can't talk about someone's business. They can't look at their future cash flow, and they can't say, "I trust you."
Yeah.
They can't do that anymore to find that solution. So if it doesn't tick the box, it doesn't tick the box.
Yeah.
So writing a credit paper now is all very well, I think, for the banks, but it means very little because you still have to go through that exercise of box ticking, which is a shame because bank money is really cheap. If you can get bank money, get bank money. Don't go anywhere else. If you can get it from your bank, go there.
Yeah.
But only if it's right.
Yeah. And there are lots of situations where something more flexible is more appropriate.
A larger customer come and see me the other day, because we deal with large and small. Their bank, I won't say who it is, but their bank won't let them get Invoice Finance because they won't release the debenture. So they've got trade finance, which is exactly what they do need, but they also need Invoice Finance.
Right.
And if they get invoice, so if they internally, if the bank did it, which they could, and just have one debenture, they would reduce that line and give them that line.
Okay. Yeah.
But they need that line as well as that line. So it doesn't make any sense to me that a bank, and a very successful, very profitable business, a name we would have heard of, bank won't budge because they can't get past that thing.
Yeah, it's just there's a box that's not ticked, and therefore they can't move on.
So our job now will be taking the bank out, so finding something.
You don't mean like taking it out?
Oh.
Just take it out of the equation.
Take it out of the equation. and putting in then 2 alternative solutions.
That's a good visions in my head now.
There's the bank gone. That's great.
It's like being in the Wild West.
Sometimes really is.
Yeah.
But no, so it's all these like different things that come up, and we just find a solution. Look, sometimes I get easy ones that they just come in and they tick all the boxes, and I can go, I know exactly what lender you're going to. It's easy. I can run the quote. Some money at the moment is coming out sub 5% APR.
That's really cheap.
Like, that's super cheap.
Yeah.
Well, if you think, I've just got a new credit card, and only because I don't actually want the credit, if that makes sense. It's just, I'm never going to be charged. But that credit card was at 9.9% APR.
Which is still pretty good.
Which is pretty cheap. Because I don't really want it for actually having to buy myself time. I don't want to buy time. It's just handy. Sometimes purchases are easy with a credit card and things like that. So that was quite cheap. A personal loan, I'm trying to think what a personal loan would come out to be. If I was to apply for a personal loan, I'd probably get it around, it depends on how much. The less you borrow, the more expensive it is, of course. But let's say I went for 15 grand to do some home improvements. That for me would be around 4 to 5.
5, 6%, maybe 6,
So
actually that's pretty good, isn't it?
So when you're looking at a business loan, and I think this is the thing that slightly concerns me about our business and what we do, is people, you'll have had it. You qualify for a loan.
And people take them.
At this rate. Yeah, but you don't, it never says what they're quoting in.
No.
So the letters that come through to your business, it's like, 5%. Apples? I don't know, five what? What is this? Flat rate, interest rate, monthly? Compound, yeah. What is it? APR? What is this? And until you run the figures and then compare them, you'll never know what they're actually trying to charge. And so there's quite a few, because they're not regulated.
No. And that's different. So you are, aren't you?
We are regulated, yeah. So we're regulated with the FCA. We like it though, because it gives us a nice framework to work in.
Yeah, you know what you can do, you know what you can't do.
Exactly.
It gives people confidence that what you're doing is the right thing as well.
Yeah.
They've got somewhere to go if you don't.
Yes.
Not that would happen, but
no, but they do
have that protection.
But they do have that protection, so they, there is that. But it's not a regulated industry.
So there's an assumption that there is. I suspect most of the people, if I were to ask most of the people I work with, and I asked them, they would assume that it was.
And many of them choose to be regulated, but it's not a regulated product.
And I guess if you're not regulated, there's an argument, I'm not saying this is the case, because I'm sure there are some good people out there who are not regulated, because they maybe can't be bothered to go through the hoops involved, because it is complex. Yeah. But that's potentially business loan shark area, isn't it?
Potentially, I guess. Yeah. It's hard to say.
No, of course.
But some people charge a fee and take a commission. I think you've just got to be more transparent than that. So we just take a commission, we tell our clients that.
And you can see how much it is. And
I've never been asked.
No, people don't care because you've solved the problem for them.
Yeah, and because if they want to know, we'll tell them it's on the paper. They can see it on their paperwork. But if you know any business owner, you know that they won't read the paperwork. Please ensure that you read this and maybe get some solicitor's advice before you sign it. Yeah. As you're saying,
30 seconds later,
they're signing it.
Done,
it's brilliant. So nobody reads the small print, and that's always interesting as well, because not that I've read every bit of small print from every one of our lenders, because my life's too short.
I know someone who probably has that.
Yeah.
Okay.
She's sitting outside, isn't she? She's in the shed. Office.
I'll give you a tour later.
But there are in some of the loan agreements restrictions.
Such as?
Am I allowed to say the names of the lenders?
Don't know.
Oh, they're there. So someone like Funding Circle and Lending Crowd, they will have a note in there that says you are not allowed to borrow additional monies without their agreement.
So if you've got a loan with them, they're essentially saying if you need more money, you have to come to us. Because they're not going to give you agreement, are they?
No. Some are more flexible than others about who, you know, it depends on what you're trying to achieve and if they're comfortable with it. But you stand a chance of, if you don't discuss it with them, which people don't, if they find out for whatever reason, there could be a number of reasons how they find these things out, because they can call on your accounts and your bank statements at any time just to check. But, you know, they can default you.
Which is not a great place.
No. You kind of, I think it's 3 months to sort it out, is what you're given. So, you know, there are things that aren't always right. And, you know, don't get me wrong, Funding Circle and Lending Crowd, brilliant lenders. Fantastic.
In the right arena.
Yeah, so if you don't need any more money for a while, then that's great. But remember, you pay a fee on all these things. So if down the line you do need to get more money, and for whatever reason their appetite or their policy has changed and they go, well, no, well, now you have to refinance that money out. And so when you refinance that money out, you pay again. And whilst you save on the interest to that point, great, you've already paid a fee.
Why should you have to pay another fee?
So then you pay another, but you pay another fee because you're paying another fee to another lender.
Yeah. So this is interesting. We can talk about this all day, which is part of the reason for doing this, which is great. But I think, you know, maybe a couple of pertinent things to sort of mention. When a business does come to you, are there a number of things that you prefer for them to have in place in order for you to be able to move it forward? Because I suspect there's times you've been a little bit frustrated where people have gone, well, I want some money, and you're like, you're all there, but they don't have this, and this.
Yeah.
They've got them, they're just not there.
They're just not there. So often people just don't have management accounts. I find it bizarre that you can run a business without knowing where you are today. With or the online accounting now becomes a bit easier because they tend to download. So press a button and there's your P&L and there's your balance sheet, which is great. But often they don't have that. So they'll come to me and say, oh, my accounts aren't going to be filed for a couple more months, and no, I don't have drafts, and no, I don't have management information. And that's fine, and we can do it with that. However, it's more than likely, if your business has improved, it's more than likely you'll be charged more money for your money, if that makes sense.
Yeah.
So you can either wait a couple of months or get some MI done. Management information, balance sheet, P&L. People don't always have their VAT information, so they will entrust somebody else to do their online stuff. So it's good that a business owner has access to all these things. Bank statements are really important to me, so you can imagine. So I would love it if a client would just check through the last 3 month bank statements and make sure there's no missed payments.
Yeah, that's a killer, isn't
it? It is a killer. It is.
And this is personal or business? For the
business.
business.
So personal.
So if you're going to miss payments, do it on your personal account. Business.
But no, because that shows on your credit file.
Yeah, well, that's true.
So don't do that either. Don't miss any payments.
Yeah.
It's simple. But 3 months clear bank statements are really, really important. There are the odd times where it's very clear that a check's gone out and the money's come in, and it's clearly just missed by that day.
Overlap, isn't there? Yeah.
And that's forgivable.
Yeah.
And you know, the people we deal with aren't stupid, they can see that. Or some of them might be. But who knows? But they can see that, it's fine. And but anything, if there's lots of reoccurring,
that's red flag, isn't it?
red flag. The other thing is to not be at the arse end of your credit limit all the time.
Okay.
So using your overdraft as an overdraft should be used. So yeah, fine, fling to the bottom, go back out. Do that all the time. That's what it's for. But don't be sat with just £100 buffer zone, because you cannot afford to repay a loan.
No.
If you're there.
Yeah.
So that would be quite nice if people just sort that out.
So don't be at the end of your credit.
Yeah.
Have 3 months clear bank statements with no missed payments.
Correct.
Have management information.
Definitely, 100%.
So VAT
and VAT and management.
Balance sheet and P&L.
Yeah, it's perfect.
2 years accounts or anything like that? Always, sometimes?
Ideally, the better quality is for when you've got 2 years. Better quality money is when you've been trading 2 years.
So the more you have, basically the likelihood is that you'll be able to access cheaper cash.
Yeah.
Fundamentally.
If you've been trading for a longer period of time. Yeah. You become less risky. So the longer you've been trading, the less risky you become. But we can help people who are trading less time than that. But anything under 2 years, I'm questioning why you're just not going for a startup loan
Well, this is the other thing I was going to talk about, is because a lot of people are unaware about the startup loan piece.
So we can cover it quickly.
Yeah.
The government has a pot of money out there, massive pot of money. It's an entrepreneurial fund. It's £25,000 per director to a maximum of 4 directors.
Yeah. So that's potentially 100 grand's worth of money.
Potentially 100 grand's worth of money. It's harder to get that money to start with.
So don't ask for all of it.
Don't ask for all of it, because you can go back for a top up.
Yeah. And it's 6%?
6% APR.
Flat?
APR.
Yes.
APR, because it reduces down.
Yeah.
What else? Payment holidays available, interest only payments available. I don't think you even sign a personal guarantee.
I don't think you do.
On this one. I can't be sure, but I don't think you do.
You can't personally guarantee.
I can't personally guarantee. There's no personal guarantee. But it's cheap.
6%. At least you know where you are. You know what the payments are going to be every month.
The government are unlikely to track you down if you don't pay back.
I kind of think of it as this is possibly a poor thing to say, but it's a little bit like a business student loan, isn't it?
Yeah. It's money. That money is a lost leader. So what they're doing is they're hoping that for every 3 that fail, 1 will bloom and will pay tax and will employ people and will...
And it's less... You're going to get better commitment from the business owners than giving it as a grant.
Of course.
Because people will be frivolous with grant money.
Yes.
Whereas with lending money, you would hope the vast majority of them will make... will do some work to generate the revenue to pay the loan back.
Exactly.
Because I guess to a degree there's a finite pot and it's being rechurned all the time.
That's absolutely right.
Yeah.
So what you have to be buying something with the money. That's really important.
But,
so you can't just be working capital. You can't be paying yourself a salary.
But you could be buying in marketing expertise.
Yeah. You could be business advice, business mentoring, website.
Yeah.
You can't be
so
buying.
It doesn't have to be something physical.
Stock. No, it can. No, it doesn't have to be physical. No. But you have to be buying. They don't check actually where the money goes. To be fair, once you've done jumped through all the hoops to get there. My advice is don't go online and don't just start the process.
There are advisors around, aren't there?
There's some good advisors around that don't charge, but will track you through the process. The thing is, if you go online and just go through the portal, you get flung out to, could be Virgin, it could be Transmit, it could be the Armed Forces, do on ex-forces and someone else. There's tons of them. And they're in the hubs.
You're right.
Biz Britain is another one. It hubs around the country. And you don't know if they've got 1,000 applications or if they've got 2. And let's face it, if you're one of 1,000, you're probably not going to get any help. We use a lovely lady called Helen Steele, who's amazing.
Yeah.
And she will just take you through the process. She'll quickly check over the information that you're putting up, just to make sure it looks right, to make sure you're not making huge mistakes. And she'll give you some feedback and advice.
And that can save you a lot of time.
Huge amount of time.
Because it could get kicked around and then come back to you because it's not right. It's better than take that time at the beginning and doing it properly.
The only thing I would say is you have to pass a credit check. If you don't pass that credit check to start with, and that's the first thing they do, is a hard credit check against you as an individual. If you don't pass that, that's it, game over.
So is this a personal loan really for the business?
100% a personal loan.
Yes.
So it's lent to you, the money comes out of your bank account.
Right.
So it's up to you, and this is the other thing why it's a bit more encouraging, because the business now has to generate the money to pay you back.
Yes.
I'm not an accountant, but I'm pretty sure there's some good accountancy practices that allow you to withdraw that money back out of the business, and maybe using a bit of interest with that to get a bit more money out of the business, or leaving it in there as a director's loan. Whatever works.
Lots of ways.
Whatever works for the business, really. But that is, it's underutilised. It's brilliant, I think, anyway.
It is cheap.
It is cheap.
It is really cheap.
It is cheap. But like I say, I just pass it straight to Helen. There's no charging involved. It's just.
So it's clear. So it's clear that things have moved on in the last 5 or 6 years.
Massively.
6 or 7 years.
It's going to move again, I think.
So how do you see that happening? What's the next?
Firstly, people are hungry. They're hungry to make money. So they've seen all these successes that have been out there. So new things in the marketplace that are coming and will come in now more and more. Overdraft type facilities. So a loan isn't always suitable.
No. You might not want something long term. You might want something rolling.
Rolling, yes.
Or cash flow.
Absolutely.
Yeah. Like your manufacturing client, actually. If he just had a big enough overdraft that he could dip into to cover that would be helpful.
Whereas the banks are less likely to want to give you that.
And the 40% thing is going to hurt.
The 40% thing. That's with a well-known horse bank, isn't it?
Yeah.
Yes. Yeah, that's massive.
That's really expensive.
Really expensive. Really. So the one
So
that
maybe get off the horse.
get off the horse. It is really expensive. I don't understand how they can charge it. Anyway, so the ones that we use, you're in a fixed contract. So the difference between a bank overdraft and us, a bank can just say 30 days notice, sorry Ash, we're either going to have to flip it out for a loan, which if you're using your overdraft in the right way, why would you need, anyway, flip it out for a loan or you just got to pay it back. Done. There's no ifs or buts, that's what you have to do. Whereas with the facilities we have, it's 12 months and they will renew your contract subject to good conduct, of course, every time. It's a 2% fee every year on the level you have. You pay for what you use, and it's at 0.075% per day.
Which is not 40%.
No. If you were APRing it, i.e. doing what you shouldn't do with an overdraft and using the money all the time, every day for a year, circa 27%.
Right.
Maybe a wee bit more, 27 point something.
But an overdraft is there for end of month cash flow facilities.
It's a dip in, dip out of,
not a permanent place to be living.
Absolutely.
Really.
And then Invoice Finance is becoming less of a poor man's fallback. It's becoming now, hold on, I'm not your bank. You know, fine, Waitrose, you want 60 days, but I'm not your bank. You know,
because it's something that really impacts smaller businesses. That
massively.
They get very excited about picking up contracts with.
Big
I mean, we used to do a lot of work in the old business with local authorities, and you know, you think, oh, this is amazing because I've got a 15, 20, 40 grand contract.
Yeah.
But they don't pay you for 3, 4, 5, 6.
Then 100 days later, they're quibbling about 5 pence on the invoice. And you're just not a bank. You're not, as a business, we are not in this day and age equipped to be bankrolling all these people. So
and you get that work quite often by becoming a supplier, going on their supplier list, and it's all under their terms. So you can't even say, well, look, it's 30-day terms, and then I'm going to charge interest after that, because they'll just throw it out the window or knock you off the list.
They'll just laugh at you, and that it's really hard. So Invoice Finance now is becoming a little bit more interesting. So you don't have to necessarily put your whole book in. So let's say 80% of your customers pay you within 30 days. Why would you finance that?
Yeah.
You wouldn't bother, would you?
No.
So
because you can manage that. You know what the business cycle is on that, so you can manage it.
But it could be the last 20%, or also the bigger ones.
It's usually the way it happens.
It's usually the way, 80-20 rule, wrong way round, but there we go. So those ones can be just selectively or individually financed.
Okay.
So you can just go to Gap Cap Market Invoice. There's others out there.
And what sort of fees are we talking about?
I knew you were going to ask me that. I can't actually quote you fees,
no.
and there is a reason
why. Give me a ballpark idea of what it might cost.
Some might be.
So say someone's got a £5 grand invoice for them.
That'd be a couple of £100.
Okay, but you'd have the money.
But then if you're doing multiple invoices, they might say, well, listen, they might do a minimum fee of say £500 per month, but you can put as many invoices through.
Right. So
they're
almost creating your own credit facility for that fee.
Yeah.
That's when you need
but if it's just one invoice, then Satago is another one that does it. It's just based on that one. So it depends on how you're being paid. There's lots of nuances. So I did one for working with massive blue chip pharma companies, and they're getting paid at milestones. Now most invoice finance companies don't like that, but these are very specific sign-off milestones. And they can invoice, so they were
so as long as they're on track to
invoice,
deliver the work, then that works.
So I could do that. So they're not paying massive money, but they're using big invoices. But all their work is up front. So every time there's an 80 grand invoice, well, they've probably spent 60
already. So they need the cash.
Yeah, absolutely. Before they hit the next stage.
Yeah, and that makes a lot of sense.
So things like trade finance becoming more and more. So for the bigger business. So where you're buying lots of stuff in, either importing or just having to buy lots in, you can buy yourself 180 days. Okay. So they pay your suppliers, so it's credit insured. So they pay your suppliers safe on that money, unless they mess up, then obviously you've got to pay it back. But if something happens to you, it's insured. And you buy yourself then 180 days. So you can do lots of different things with that. Early settlement, it's nice. So you can say, if I settle now, how much discount can I get? It allows you to overbuy things. So if you're buying 100 bricks, but actually if you bought 1,000, because they don't go off, the discount would be so great. Things like that. So there's lots of ways you can use interesting products out there. And there's more and more coming in every day. We had a new one out the other day. But just weird ways of using money, which is great. I like it.
And again, all stuff that, I mean, as you say, I think the kind of thing I'm getting from this is that the banks are great.
Yeah.
If you've got simple needs and you've got the good credit in place, and you can tick those boxes, use your bank, because it's a safe bet. It's a known convenience. Yeah. But quite often you're working with people who've got more complex needs.
Definitely.
Shorter term, longer term, rolling credit, invoice finance, as we talked about. Yeah. So actually, it's probably, if the banks say no, that doesn't mean you can't get money. And I think that's the big thing.
No.
Some people just stall at the bank, and I've introduced you to people because people have gone to their bank and they've gone no, and you've managed to help them.
But they don't. The thing the bank doesn't do is they don't explain why.
Yeah, they just say computer
system. Yeah, sorry, we can't help you. Which is a shame, really, because if they're a bit more specific, you'd probably understand better.
Yes.
And it's often
in their interest to help them.
Yeah.
Because they're going to make some money.
Yeah. And it's nothing inherent. Often there's nothing inherently wrong with you or your business. It is just some technicality they don't like. So it's very difficult. I had funny. We do a lot of MBOs as well, because banks are a bit on MBOs too.
Do you want to explain what
Sorry, management buyouts.
Yeah.
So you're working in the company, main partner wants to leave, or one of the directors wants to leave, they want to sell their shares, you're happy to take the business forward, and that's what you want to do, but you need the money to get rid of said director or directors. Or you're merging a few businesses together, and because of that merger, you need to restructure. People like to leave on a restructure, so we need to get rid of that. It's never very straightforward. Nothing straightforward.
It's very complex.
But often it is. If you just look at the numbers and look at the figures, and it works, everything else can be done. Does that make sense? So whereas a bank won't necessarily go, well, it stacks on paper, because then they look at everything else and go, well, you're a homeowner, but you haven't got enough equity. Can't do that. Sorry. Then it's dead. It's dead in the water. And I had a lovely testimonial from a lady, and I helped her. She's an accountant. She brought out the leaving director, and she said, I went to the bank and they just turned me down straight. She said, I thought my dreams were absolutely shattered, and you helped me live my dream.
That's really cool.
Which is really cool.
Yeah, really cool.
Which is really quite cute. Yeah. But I forget actually that
you're changing people's lives. You have a real impact.
And she was an interesting one because she'd been in the business for 5 years. She brought in a load of business. Yes, it was an interesting setup with the exiting director who was staying on for a few years as well. Lovely guy, and she didn't have enough equity in her home. So because she's a lot younger than me, and but obviously very successful and very good at what she did. But that's why the bank wouldn't touch her. Right. But we have a lender out there who just said, fine, we'll take a 50% value guarantee. It was a bit less, actually, to be honest. And that's not what they're bothered about. That was just getting her to buy into it. But they lent her more money because they could see that there was a small cash flow dip once it had all changed.
Right, so they covered that as well.
They covered that as well. Because the last thing they wanted to do was say, well, just because you don't have enough equity in your home, we're not going to give you enough. We're only going to give you so much and you'll probably fail. They're just so much more business focused. Yeah. It's a great business, great clients. She was fabulous. The exiting partner was brilliant as well, because so supportive in what they were doing. And you can't put that through an algorithm.
No, you can't. Because it just doesn't stack up at all.
No, you need to have that one-to-one discussion. And my job when somebody comes in, I had another one today, my colleague picked it up, and we were looking at it and it's boosty, and he's like, where would you put this? Well, you go here with it because of all these factors. Probably need to know a bit more about that deal, but it's possible we can place it, and it's nearly £1 million. And I'm doing a few, well, they take ages, but I could be doing 3 million 1 minute, and I could be doing 5,000 the next, and it's really interesting just to, it's everybody's lives.
Yeah.
And it's so different.
Because £5 can make a huge impact on a small business.
Massive impact on a small business. And sometimes just taking that pain away of not worrying about money anymore.
Yeah. I get that.
That's nice when you can just say it's in my bank.
And it's just there as a buffer.
And I've used the bit I need to use, and I've got this little bit to sat there. And yes, I know I have to pay it every month. But that then inspires you to get a client that will cover that cost every month. So there's no...
Well, I know from experience, just having a it's almost like a slush fund. It's like, I don't need an overdraft. I've got cash in the bank because I borrowed it, and for me, that fee I'm paying every month is worth having the security because it changes the way I make decisions. Because I've gone from I'm not sure I can afford that because it's going to take me to near zero on my bank account. To okay, I'm going to dip into that usable fund, but I can see that 3 months down the line I'll be well out of it, and therefore I can make that investment. And it changes the way you think about stuff.
It's a confidence thing, isn't it?
Totally.
Having that bit of money where you just know, and it also focuses you because you've used it. Now you know you've got to pay it back.
But you've got to make sales.
Yeah, and that focuses your mind on how you do your sales.
And then generally, if you increase sales, your business improves.
Yeah. Which should do.
And
if it's not, then you're charging.
Then you're in trouble.
There's something really wrong with your business model if it's not doing that. But I think it's a shame that people are not doing stuff in their business because their bank said no, or they think their bank's going to say no, or they don't think they'll get the money, or they assume they're going to be ripped off, because those things aren't always true.
No, they're not.
And there's no harm investigating something to find out what you can and cannot achieve.
Because having a conversation with yourself, for example, it doesn't mean you are going to borrow the money. But and I know you've helped people, clients that I put you in front of who, you've not been able to help them because of whatever reasons, credit, they've not been trading long enough, etc., or a couple of bounced payments in their personal portfolio. But you've put a plan together with them.
Yeah.
And they've always come back to me and go, no, okay, Sharon couldn't help us, but I've got a plan, and we know that in 6 to 9 months' time, we will be able to do something.
This is where I need to be.
And again, the bank won't do that.
No.
They won't have that. And I know it sounds like we're jumping on the banks and beating them up.
No,
we're not, because...
But bank managers have changed. And
yes, and that's not their fault, it's just the process.
You are only as good as the person you're sat in front of as well. Yes. And it is difficult. So I work bank managers all the time. I love them, so because they give me work, I try and give them work back. Because that's, for me, if somebody comes to me and I think, God, this is a bank deal, that's where I take them.
But you're going to put them in front of a bank manager or representative that you've got to know and you've got a relationship with, because you know they'll look after them properly. Exactly,
and I know that I can trust that process going through. But, bank managers, if you don't have someone you can sit and talk to, and you're only using phone banking, well, that person isn't a business person on the end of the phone. They're employed by the bank to answer the phone, and they could be thinking that they're going for lunch in a minute, or they're doing this or doing that, and things can get missed because there's no relationship there.
And I get that's a really good point you just made. I'll just want to jump on. So I don't know if it necessarily needs an answer, but it occurs to me that there are a number of challenger banks popping up.
Yeah. And
not the challengers such as I don't know. Handelsbank is probably not a challenger bank because they've been around forever, but the Starlings of this world, Metro to a degree, okay. But there are more and more coming out that are almost just app-based. Yeah. They might have a little bit of phone support, which in fairness to it is very good. Yeah. But you're never going to have a personal. It's an even further removed from any kind of personal relationship that you have with one of the big four banks, and so that. We're in a situation now where banking has become easier, it's more efficient, it's more effective, it's quicker. Somebody was on a Facebook group that I'm in the other day talking about how he did a whole transaction through a bot on the bank, an AI bot. So it was like, how much do you want to transfer? Are they already a customer? Yeah, just copy and paste the details into this.
Wow.
And bang, they transfer the money for it. Cool.
Easy.
But you can't have a conversation about lending with that.
No.
Bot.
No,
And
you
so
can't.
the human element...
It's lost.
And the problem is that people need money. Growth is a challenge.
Yeah.
Lack of cash flow is a challenge.
Mm-hmm.
An end of month shortfall is a challenge.
Yeah.
People not paying invoices is a challenge.
Yeah.
So even though it can be for positive reasons, having a conversation about getting more money is usually complex.
Yes.
It's usually around solving a problem.
It's never one-dimensional.
Yeah, and I don't think that the technology yet exists to make that happen.
I think it'd be really challenging to have that technology, because you have to instinctively know which questions to ask. And so, where you're doing an algorithm and you're kind of going the yes, no, yes, no, yes, no, yes, no boxes, taking you to a solution, well, actually, that might not be a yes or a no. That might be something over here that you need to just question a bit more, dress up slightly differently, or break down and just understand. So it's not easy to understand a person.
Yeah.
And often with our lenders, so we have algorithm lenders who are great, and we have lenders we can talk to who are equally fabulous, and we have a mixture of the two. Somebody will chuck it through an algorithm but will listen to a story.
Yeah.
So if I can explain something, another thing that we find is people who've been ill.
Mm-hmm.
So their business has, sort of maybe taken it, stuttered, but not failed.
Yeah.
But they're now back and they've turned it round and they are looking for the next stage. And explain cancer to an algorithm. You can't.
You can't.
But if we can write a report up and say, well, actually, this happened or that happened, or just
there are very clear reasons.
Yeah.
And look, when that person's in the business, it works. They weren't, it didn't.
And
they're back in it, and it's working again.
And also, they've made changes.
Yes.
Because they know that they are not around forever, and they need to take holidays. So they've now put a manager in place, or they've done this, and we can show that they've made changes in their business to prevent that, whatever that is, happening again. Same with losing a big customer.
Mm-hmm.
Liquidations are only going to get bigger as we go through. We're in a turbulent time still. Brexit has not happened. Let's face it.
It's happening, but it's not
in
happening.
transition.
Yeah.
It's now, everyone's going, it's like a false sense of security. Like, we're like, oh, this is quite nice, quite easy, until all of a sudden all the trade deals change, until things start to change and are agreed moving down the line. I think December's the deadline, which seems crazy.
Good luck with that. I thought we were going to get through this whole conversation without the
Sorry, but we need to talk about it. And let me tell you why we need to talk about it briefly, because beginning of last year, before the first Brexit that never happened, we had a massive increase of people coming to us for money because they needed to buy that widget from Germany because that's the only widget that fits, and blah blah blah. So we had all these people doing this. We had people leveraging up. Summer was a bit quiet, and then the last quarter was just hectic, where everybody kind of used up all their resources that they'd done earlier in the year,
and want more.
And now they need more. And also the certainty of love it or hate it, having a government in place that can make a decision. We are fait accompli where we're at, so we kind of just got to get on with it.
Yeah.
But we should be mindful now of looking at the future of our cash flow and saying, what if? They need to be doing that SWOT analysis and saying, what if? So if that happens, how's that going to affect my cash flow? Coming to me last minute is fine. I can deal with it. I can help you.
But you like a little bit of time.
I prefer a little bit. Just occasionally. It's when I get the email on a Sunday saying, do you think I could get that money by Monday? Well, firstly, I'm not reading that email on a Sunday. Thank you. And secondly, no. Sometimes.
Because by the time I read it, it's Monday.
Exactly.
Next Monday?
It is possible. No, it is possible. You get me all your stuff on a Monday morning, I can have you that money on the Monday afternoon. But it's going to be expensive. And if that's what you want, that's fine. But maybe that's not the solution. Maybe the solution is putting in a trade finance Maybe it's asset finance, maybe it's refinancing something, maybe it's invoice money, I don't know, maybe it is a loan, maybe it is an overdraft. But making that decision sensibly, slowly, thoughtfully, working with the likes of yourself as well, or your accountant, where you're just looking at these things going, well, yeah, great, we're expanding, we're going to have some extra, we need some extra staff here. Well, staff cost a lot of money, a pen in it house, and they cost a lot of money. So people don't think about the initial impact of that staff member. So, all right, it's going to cost you 30k a year to hire, to employ them physically, but that lull of training them from starting to when they're going to make you money,
It's going to cost you.
It's going to cost you again.
Yeah.
I can't remember, I read somewhere, it's like £120,000 or something. It's average cost of employing someone with all the things, because you're taking off the ball, training someone.
Yeah, or you're having to put someone to mentor them in place.
So
there is all the
productivity
training,
falls,
productivity falls,
and plus everything else that goes with it. Can your business afford that, or do you need to put in a solution before you start?
I think most people wait until they're halfway through and panic.
Yeah, and panic doesn't produce good results ever. So for me, I'm just it's a case of like, well, let's just stop. Let's get our information together. Let's look at why you need it. Let's put a plan together. If you've got healthy money at bank, or just money at bank, it's helpful sometimes. There's no missed payments because you're not in that position. You've got MI and you've got your accounts, and your business looks strong. Guess what? You're going to get a better rate.
Yeah, of course. So what I'm hearing from this and across the whole conversation really is do as much as you can to future-proof
Definitely.
any need for cash.
Definitely, 100%. And also be mindful about what you're taking out of the business. Don't be sucking it dry all the time, maybe.
No, there are people who use it like a piggy bank.
Absolutely. And you know what? There's no point having a shed load of money in your business and you living, like a monk in a cardboard box. That doesn't work either.
No.
But lenders are happy to lend as long as you're not taking every penny out of the business yourself.
It's got to be proportionate.
And then expecting somebody else to bail you later.
Yeah.
I think that's quite important too to remember.
Fascinating stuff.
Yeah.
Enjoyed that.
Thank you.
Thank you for coming in.
Well, thank you for having me.
That's
Thank you
all right.
for welcoming me to your lovely home.
That's all right.
Sorry, Kay. Being shut down.
Shut down to the office.
Bless her.
She doesn't mind at all. So thank you. And people want to get hold of you?
Yes.
I mean, this video will sit on our site
Oh,
anyway,
okay.
and we'll put a little thing on the bottom, but
Yeah.
might as well say it. So
Well, send a
Good.
pigeon.
send pigeon to
Pigeon,
or
okay.
telegram.
Telegram. Wow, that'd be amazing. I really want someone to send me a
Send me
telegram.
telegram. So
Please send me
somebody
yes.
needs to sell
So-
her
yes.
a telegram.
A telegram to
Send
ask for
Sharon
money.
a telegram.
So Sharon Cook at choicebusinessloans.co.uk or 01494 410125 is the phone number.
Even if they just want to chat.
Just a chat. Yeah, it's all free.
Yeah.
Good, safe advice.
Yeah.
So
Brilliant.
thank you.
No, thank you for coming in. Love that.
Thank you. First one.